Hey there, Iggy the Investing Iguana here. The Investing Iguana is featured and ranked 8th in the 2023 Influential Tigers by Tiger Brokers, with almost 500,000 reads. Today we're diving into the exciting world of newly listed stocks on the Singapore Exchange. Kasikorn Bank, one of Thailand's largest banks, just made its SGX debut. In this video, I'll break down everything you need to know about Kasikorn Bank, its business, financials, growth prospects, and whether it might be a good fit for your investment portfolio. By the end, you'll have a solid grasp of this regional banking powerhouse and what its SGX listing means for investors like you and me. So grab a cup of coffee, sit back, and let's explore the investment potential of Kasikorn Bank together. Trust me, you won't want to miss this. Kasikorn Bank, a prominent financial institution, recently announced a dividend of 67 cents per share. While this might initially seem like a cause for celebration, it's crucial to examine the sustainability of this payout from a financial analyst's perspective. We need to ensure that Kasikorn Bank is not merely distributing money to shareholders without considering its long-term financial stability. To understand this better, let's first explore what Kasikorn Bank does. This bank operates in both the corporate and retail sectors, offering a wide array of financial products and services. The corporate division of Kasikorn Bank serves a diverse clientele, including public and private companies, government-backed enterprises, and other financial institutions. This division provides tailored financial solutions to meet the unique needs of each corporate client. On the retail side, Kasikorn Bank focuses on individual customers. They offer a comprehensive suite of services, including loans, deposits, cards, financial planning, and transactional banking services. These services are designed to help individuals manage their finances effectively and achieve their financial goals. In addition to these, Kasikorn Bank also operates a treasury and capital markets division. This division handles crucial functions such as funding, risk management, and foreign exchange. It plays a vital role in ensuring the bank's financial health by managing risks and securing funds. Now, coming back to the dividend payout, it's essential to consider the bank's earnings, payout ratio, and future growth prospects. A sustainable dividend payout is typically backed by strong earnings and a reasonable payout ratio. Furthermore, the bank's future growth prospects can give us an indication of whether it can continue to pay dividends at the current rate or higher in the future. Okay, now let's talk more about dividends. Kasikorn Bank has a commendable track record of consistently paying out dividends since 2011, which is a positive indicator of the bank's commitment to returning capital to its shareholders. The bank currently follows a biannual distribution schedule, meaning it pays out dividends twice a year. This can provide a steady income stream for investors who rely on dividend payouts for their cash flow needs. As of today, Kasikorn Bank's 12-month trailing dividend yield is 3.48%. This yield represents the ratio of the total dividends paid out over the last 12 months to the bank's current stock price. In addition, the forward yield for the next 12 months is projected to be even higher at 5.4%. This suggests that Kasikorn Bank plans to increase its dividend payouts in the near future, which could be a result of increased profits or a strategic decision to return more capital to shareholders. However, it's important to note that we can't just look at the dividend yield in isolation. The yield gives us a snapshot of the bank's dividend payout at a particular point in time, but it doesn't tell us anything about how those dividends have grown over time. For that, we need to consider the growth rate of the dividends. Over the past 3 years, Kasikorn Bank's annual dividend growth rate was actually negative at -3.90%. This means that the bank's dividends have been shrinking on an annual basis during this period. Extending our view to a 5-year horizon improves the picture slightly, with the annual growth rate standing at -2.90% per year. While this is still negative, it's less severe than the 3-year rate, suggesting that the rate of decline in dividends has slowed down. If we look back over a full decade, the annual growth rate turns positive, albeit modestly, at 0.5%. This indicates that despite the recent declines, Kasikorn Bank's dividends have grown, albeit slowly, over the long term. Based on the current yield and the 5-year growth rate, an investor who decides to purchase Kasikorn Bank stock today could anticipate a 5-year yield on cost of approximately 3%. While this might not be a staggering figure, it's still a decent return on investment, especially considering the stability and reputation of Kasikorn Bank in the financial sector. The yield on cost is a useful metric for investors as it gives a snapshot of the potential returns from dividends over a specific period. However, it's not the only factor to consider when evaluating a dividend-paying stock. The dividend payout ratio is another crucial aspect to look at. The dividend payout ratio tells us what proportion of the bank's earnings are being distributed as dividends versus what is being retained to fund future growth or act as a buffer against potential downturns. As of the end of 2023, Kasikorn Bank's payout ratio stood at 0.23, or 23%. This is a relatively conservative figure, suggesting that the bank is retaining a significant portion of its earnings. This conservative payout ratio is good news for the sustainability of Kasikorn Bank's dividends. It indicates that the bank is not overdistributing its earnings, which could potentially jeopardize its financial health in the long run. Instead, by retaining a good chunk of its earnings, Kasikorn Bank is ensuring that it has sufficient funds to invest in growth opportunities and weather any potential financial storms. Profitability is indeed a crucial factor when assessing the financial health of a company, especially for dividend-paying companies like Kasikorn Bank. According to Guru Focus, Kasikorn Bank's profitability is ranked 6 out of 10. While this might not be an outstanding score, it's still a fair ranking that indicates a decent level of profitability. What's more important to note is that Kasikorn Bank has reported positive net income every year for the past decade. Net income is the bottom line of a company's income statement, which shows the company's earnings after all expenses have been deducted from revenues. A positive net income means that the company is making a profit, which is a good sign of financial health. The fact that Kasikorn Bank has been consistently profitable is crucial for maintaining and growing the dividend over time. Consistent profitability means that the bank has a steady stream of earnings to distribute to shareholders in the form of dividends. It also means that the bank has the financial stability to weather economic downturns and continue paying dividends even in tough times. Moreover, consistent profitability can also provide the bank with the necessary funds to invest in growth opportunities. This can lead to increased earnings in the future, which could potentially result in higher dividends for shareholders. Growth metrics are indeed crucial when evaluating a company's prospects, especially for a company like Kasikorn Bank that pays dividends. A company that isn't growing may struggle to continue raising its dividend over time. According to Guru Focus, Kasikorn Bank has a growth rank of 6 out of 10. While this might not be an outstanding score, it still indicates a fair growth outlook for the bank. Over the past 3 years, Kasikorn Bank has managed to grow its revenue at an average annual rate of 8.8%. This growth rate is quite impressive, as it outpaces about 59% of its global peers. This suggests that Kasikorn Bank has been successful in increasing its income, which could be due to a variety of factors such as expanding its customer base, launching new products or services, or improving its operational efficiency. In addition to revenue growth, Kasikorn Bank has also seen an increase in its earnings per share, EPS. The EPS has increased by an even more impressive 12.3% annually over the same 3-year period. This growth rate is better than nearly half of its competitors worldwide. An increasing EPS is a positive sign as it indicates that the bank's profitability is improving. This could potentially lead to higher dividends for shareholders in the future. However, one potential area of concern is the 5-year EBITDA growth rate, which stands at -0.40%. EBITDA, or earnings before interest, taxes, depreciation, and amortization, is a measure of a company's operating performance. A negative EBITDA growth rate suggests that the bank's operating performance has been declining over the past 5 years. However, it's worth noting that even this negative growth rate beats out about 20% of Kasikorn Bank's rivals. This suggests that while there may be room for improvement, Kasikorn Bank's performance is not significantly lagging behind its peers. In summary, Kasikorn Bank's dividend appears to be fairly sustainable. The bank's conservative payout ratio is a positive sign, as it suggests that a significant portion of its earnings is being retained. This retained income can be used to fund future growth or act as a buffer against potential financial downturns, thereby contributing to the sustainability of the dividend. Moreover, Kasikorn Bank has demonstrated consistent profitability, which is a crucial factor for maintaining and growing the dividend over time. A consistently profitable company has a steady stream of earnings that can be distributed to shareholders in the form of dividends. This is a positive sign for investors seeking stable income from their investments. In addition to its profitability, Kasikorn Bank has also shown healthy growth in key fundamentals such as revenue and earnings. This growth indicates that the bank is successfully increasing its income and profitability, which could potentially lead to higher dividends in the future. However, one area of concern is the lackluster dividend growth rate in recent years. A stagnant or declining dividend growth rate could be a red flag for investors seeking rapidly growing dividends. It suggests that the bank may be struggling to increase its dividend payouts at a rate that meets these investors' expectations. Given these factors, Kasikorn Bank could be a solid choice for income-focused investors who are comfortable with a relatively mature dividend that may not grow very quickly. These investors typically prioritize stable and predictable income over rapid dividend growth. On the other hand, investors seeking more rapid dividend growth may want to consider other investment opportunities. While Kasikorn Bank's dividends are fairly sustainable, the slow growth rate may not meet the needs of these investors. Therefore, they might want to explore other companies or sectors that offer higher dividend growth rates. In conclusion, while Kasikorn Bank has several positive attributes such as a conservative payout ratio, consistent profitability, and healthy growth in key fundamentals, its slow dividend growth rate is something that potential investors should keep in mind. As always, it's important to conduct thorough research and consider multiple factors before making investment decisions. So there you have it, the lowdown on Kasikorn Bank and its SGX listing. We covered the bank's core businesses, key financials, growth strategy, and analyst opinions. While Kasikorn looks like a solid, well-run bank, it's crucial to do your own research and consider how it fits into your overall investment plan. Don't just take my word for it. If you found this video helpful in your investing journey, show me some love by smashing that like button and subscribing to the Investing Iguana channel. I put out new videos every week to help you navigate the wild world of finance. Also, let me know in the comments what other newly listed SGX stocks you'd like me to cover. I'm always looking for new ideas to explore. Until next time, this is Iggy reminding you to invest wisely and have a bit of fun while you're at it. Catch you later, friends.